anytime anyone talks about investing, they always say that you have to understand that your money can go up as well as down and down as well as up. There are lots of sad stories out there about people losing money investing, especially in these highly volatile spaces such as cryptocurrency and forex. For example, in the news earlier this year, there was the story of Stephen Thomas, who, because he'd simply forgotten his password to his online crypto wallet, he'd lost over like $200 million. It's easy to look at some of the finance charts and focus on the dips and understand that buying at the wrong time could send you into regret. So why do I, and millions of other people, invest? Just in case you didn't get it through at the beginning, I will say it once again. Your money can go down as well as up when you are investing. I do not provide financial advice, only financial education, as well as insight into my own finances. Make sure that you do your own research or seek expert advice if needed. With that out of the way, I can tell you the reason that I invest is simply that I see it as a great way to grow my wealth. Could my money go down? Sure. But I have confidence in my investing strategy to see it go back up again. I try not to look at the small ups and downs, but at the long-term trends. If you take any stock, even a highly successful stock, one of those that we all wish we'd have invested in 10 years ago, you know the ones, there would still be times where it drops if you look at short periods of time. So let's take Google as an example. If we look at the last 5 years, it's risen from $777 to right now $2,723.68. That's a nice increase over 5 years. You'd be happy with that investment, right? If we look between the 14th of February and the 20th of March, and we all kind of know what was going on then, it dropped by $448.42. That's a drop of 29.49% in a month. Imagine if you saw the success of the stock and decided to invest your money in February. Let's say you put in £1,000 and a week later it's now worth £900. You're starting to panic, but you're going to wait. It'll go back up, right? Another week passes. Now your investment is down to £800. So you're like, okay, this is not good. I can't afford to lose £200, but I'm going to have to wait and hope for the best. Now a month later, you're down to £700. You're like, okay, that's it. I can't lose anymore. It's time to withdraw my money. So now you watch as the graph mocks you and shows steady growth upwards, surpassing your initial investment price higher and higher. That's a horrible situation, right? And that is why I invest for the long term. All of that little story happened over the course of 1 month. Is it possible that the price could just keep going down and down though? Yes, but I try and reduce that chance by investing in funds. So what are funds? So they are a collection of stocks all bundled together. That way, if a company is doing badly, it's only like a tiny, teeny portion of my overall investment. It's not the entire thing. There is no certainty with investing. No one can predict the stock market. You can and should put some time into researching where you want to put your money, what platform to use, strategies to buy and sell. The truth is though, no one can predict any of it. Here's something that might cheer you up though. We can't predict what might happen, but we have accurate records of what has happened in the stock market in the past. Past performance doesn't necessarily indicate future performance, but it is something else that we can take into consideration. Something that really boosts my investing confidence is looking at the past performance of something like a tracker fund that follows the S&P 500, which is a fund made up of the largest 500 companies in the USA. So it's not the volatility of one stock, but lots of companies, which to me gives a better overall look at past performance. If we look at this chart, we can see why long term is a major part of my strategy. If we start with the doom and gloom area of minimum performance, meaning we bought and sold at the absolute worst possible times over the past 10 years, then I would have lost 4%. That's bad. That's not something I want to see, but this is the worst case scenario, right? However, if you look at 20, 30 or 40 years performance, even at its absolute worst, I would have grown my money by up to 4.9%. Now, instead of looking at the maximum performance, because, that seems kind of unlikely to me as somebody who pretty passively invests and rather than stalking the market 24 hours a day, then I'm not going to be able to pick those perfect times. I would look at the average performance. So we can see that the average performance seems to balance out at around 9%. Well, that's like significantly better than any savings accounts right now. They're like under 1% and sometimes as low as 0.01% for quick access savings accounts. 9% is also better than inflation. Oh, and about inflation, these numbers are not adjusted for inflation because, well, not many people adjust for inflation when they look at their savings account interest, and I wanted to show people a comparison between savings and investments. So let's look quickly at the numbers adjusted for inflation. So after inflation is considered, we are still up, which means that we have beat inflation and grown our wealth. What could this actually mean for my money? Well, if I make an initial investment of £1,000 and I invest an additional £200 at the start of every month for the next 30 years, assuming an average growth of 9%, then I will have, wait for it, £356,143.81. And that's a nice amount of money, I think. And over £280,000 of that is interest. Thanks to compounding interest, I have a video all about compounding interest. I will link it just up here. And again, that is not taking inflation into account. It's also based on past performance. So it doesn't really mean anything for the future, but looking at the average growth over such long periods of time certainly gives me confidence in investing. That's why I invest. I have more videos about investing and my investing strategies, so check out this playlist right here. Do you invest? Do you have any particular strategies or feelings about investing? Let me know in the comments below. Subscribe for more financial education, and I hope to see you in the next one. Bye!